What's up, you guys? It's Paul here. In this video, I want to quickly show you the best technical indicators that I use on a fairly regular basis to understand the trend of the stock market and which would be optimal times to buy into a stock, okay? Now, the reason I only say buy into a stock is because I'm not a day trader. I don't watch this every minute of the day to see when I should buy and when I should sell and make a bunch of day trades. I usually typically invest for the long term and buy and hold as long as I still believe in the company, okay? So just because I see a trend that the stock market is about to fall, I don't usually sell out. I just stop buying and I wait to pile up cash, wait for a point where it's about to turn back again to an uptrend, and then I start piling in, okay? So that's my strategy here. I want to make that very clear. If you're here for day trading ideas, then this is not the video, okay? This is to get an idea of the overall trend of the market or that particular stock, so that you can better understand when you could buy in more and when you can understand if a stock is undervalued or overvalued, okay? So the first indicator that I'm looking at is called the moving average, okay? Now the most common moving average that I use is called the 50-day, 200-day moving average here. And in this particular graph here or chart for SPY, it's indicated by the green and red lines, okay? Now the green line is the 50-day moving average and the red line is the 200-day moving average, okay? Now there are two ways you can use the 200-day moving averages, okay? The first way I look at it is to understand the overall direction of the market, okay? Or the trend of the market. So as long as both the green and red lines here are going up, it means that you're in an uptrend. If it starts going down, then you're potentially in a downtrend, okay? And any time there's a crossover between the 50 and 200-day moving averages, that's a pretty strong confirmation that we are turning from an uptrend into a downtrend, okay? Same thing here, when it crossed over, that's a strong confirmation that we just turned in from a downtrend into an uptrend, okay? Now, as you can see, if you strictly follow this, you'd realize that you're pretty late here because you're already starting to pick up, or here the market has already risen so much if you waited till these points, okay? And that's where you want to look at a few other indicators in combination so that you can be a little better at timing the market, okay? Now, before I get into the other indicators though, the other way you can use the 50 and 200-day moving averages is to understand what are the strong support and resistance lines, okay? The support lines means that a stock usually bounces off of it and keeps going up. A resistance lines means it keeps hitting that top and keeps going down, meaning that there's still not a strong uptrend, okay? So those are usually really good ideas or rather really good indicators to look at to understand if the market is about to move up or about to keep going down, okay? So to give you an example here, as a support line, as the market started going up here, you can see that the stock market, which is the blue line or SPY, hit the 200-day moving line twice before it started going up. What that shows you essentially is that the 200-day moving average provided a strong support here to continue the bullish trend, okay? Out here, when the market started falling sharply at the end of February, you'd see that it crossed both the 50 and 200-day moving average very quickly, temporarily tested the support here and then crashed back, which kind of gives you a confirmation that we're in a very strong downtrend, okay? If you look at it here as well, for the 50-day moving average, it crossed it very quickly. It showed that we were in a pretty strong bullish trend. Went up here, crossed the 200-day trend as well very quickly. We went up, it crashed back down, tested it, went back up here, tested 200-day again, and then kept going up, okay? So these are exactly how I use to decide whether we are in a strong uptrend or a downtrend, okay? Now the second indicator that I use is called the MACD lines, which stands for moving average, convergence, divergence, okay? Now in an MACD line, you will see two lines going kind of together, where the blue line is called the leading indicator and the orange line here is called the lagging indicator, okay? So what this shows you, the way to interpret this is, whenever the blue line crosses over the orange line, it gives you an idea of a certain trend, okay? So over here, they're really close together, which also falls in line with how the market is moving, okay? Now, as long as it's above the zero line, then you're potentially in an uptrend, okay? Which is exactly why these lines are really close together, both the leading and lagging indicators, and even the stock keeps going up continuously, okay? Now, As soon as the blue line crosses over the orange line, that's usually your first sell signal, okay? Now, when I say sell signal, I don't exactly sell my shares. It just gives me an idea that there's potentially a drop coming in. But if you look closely here, though, you'll see that the blue line crossed over the orange line several times. Even out here, it crossed over, but crossed back, crossed over, crossed back. So the real confirmation you get is actually when it crosses over the zero line and goes into the negative, okay? So you can see this crossover coincided with just the peak, almost the peak of this particular drop. And if you just kept holding on and paid attention to how the MACD line was doing, as soon as it crossed the zero line here, you would see that it kept going down, okay? And if you bought in here, which a lot of people probably did because they assumed that the 200 days providing strong support, they slowly started seeing things picking up. And if they kept buying in here but didn't pay attention to the MACD line, they would have completely mistimed getting back into the market, okay? Because if you see that the market is going up here, but notice that the MACD line is still below the zero level, you'll notice that it's still in a pretty strong downtrend, okay? So if you still held off here, you would see that it kept going down and down and down, and around here it started turning around, okay? Now, obviously, before this happened, it's impossible to time this bottom because, for all you know, it could have kept going down. But right out here, when the blue line finally crossed the orange line, or the leading indicator crossed the lagging indicator, you would see that it was starting to get into an uptrend slowly, okay? So what I did was I started buying in around here, okay? And once it crossed the zero line here, that again was a confirmation that we're in a strong uptrend. It kept going up and up and up, and it crossed the 200-day line, and in combination of both of them, it was a double confirmation that we're in a strong uptrend now, okay? So other than just the SPY, let me show you a few more examples here. Let's look at Tesla. If you look at the Tesla line, you would see that, right after here, it started dropping pretty much with the market. And look how strong the support line, the 200-day moving average, worked as a support line, okay? I actually bought into Tesla on March 18th because I saw this as a strong support line. I bought in. See, if you hit the absolute bottom here, it was around 356. 358, 360. I think I bought in more like 380, but still it was on March 18th because I saw that the 200-day moving average was providing a strong support, okay? It could have just as easily gone down further, but I just bought in a couple of shares, started seeing that it was going up, and around here, the leading indicator crossed over the lagging indicator. I bought a few more shares here, and I just held on, and the rest is history with how Tesla has been going on since then, okay? Another example, if you look at Shopify, same thing here. It came down, fell below the 200-day moving average here. I bought a couple of shares, waited for it to go back up. Then it tested the 200-day again. Bought a couple more shares. And even here, if you see, the MACD line crossed over twice. And once I knew that there were these double confirmations that this around the 360 to 380 was a strong support, I bought in several shares, and then it just was off to the races again, okay? So that's exactly how I use a combination of the 50 and 200-day moving averages along with the MACD lines to confirm the direction of the stock, okay? Now, another final indicator that I use, this is more so on a day-to-day basis. I use it only as an indicator. Like I said, I don't use it to day trade. But to understand more on a more frequent basis as to how the stock might be behaving is called the Bollinger Bands, okay? That's this kind of a shaded region that you're seeing here, okay? So typically, if you see it the way I set it up, 20 stands for the 20-day moving average, and 2 is the standard deviation, okay? So at a given price, say here, when I highlight it here, you'll see the price up top to the left, okay? So at this point, Shopify, for example, the 20-day moving average was 495, and the lower band is showing 435, and the upper band is showing 555, okay? And those are the standard deviations. Now, the way Bollinger Bands really work is that the stock, it represents the volatility in the stock, and the stock keeps touching the upper half, or rather the upper band and the lower band, and it keeps trading between these bands, okay? Now, the way I look at it is every time it's hitting the upper band, it's a little bit in an overbought territory. Okay, like I said, even though it's overbought, doesn't mean that that's the point where you sell. But then you also look at the 50, 200-day moving averages and what the MACD line is doing, and understand whether this really is overbought or if you're about to see a downtrend. Okay. Now, another thing about the Bollinger Bands is that the tighter the bands are, the less volatile the stock is. Okay, but the wider it gets, it means the more volatile the stock is. One other strong indicator in which the Bollinger Band helps a lot is whenever there's a narrow band here, and then you suddenly see the stock drop quickly like this, or go up to the point where it's exceeding the lower band or the upper band, it's usually a strong indication that the stock is about to change trends. Okay, so clearly here, as soon as it cut this line, the lower band here, it gave me an idea that we are potentially in a downtrend. Okay, that was a confirmation to this crossover here, as well as the increase in volume. Okay, now volume also is a really important factor, because as you can see here, as the stock was coming down, the volume was going up, meaning that there was a lot of selling pressure. As it started turning around, you would see that the volume was still pretty high up, meaning that there was a good amount of buying pressure. Okay, so that's mainly what I wanted to share with you guys here. It's the three indicators that I use on a regular basis: the 50-day and 200-day moving averages, the MACD line, to give me the first hint of when the trend might be shifting, and then using these support or resistance lines to confirm my bias, along with the Bollinger Bands and the volume. Okay, if you have any questions, please leave them below. I know this is not really straightforward. You should really try this with various stocks so you really understand how they're behaving, and make sure that you really are able to read the trends properly before really trading based on the indicators. Okay, I hope that was helpful for you guys. If you have any questions, please leave them below, and smash that like button if you enjoyed the video, and subscribe and hit the notification bell if you haven't already. Okay, thanks again for watching, and until next time.